Good morning, everyone. Good to see a few of the early birds up and at it. Having some technical difficulties this morning with my kit, but anyway, we'll keep moving on. Hope you're all well. Good to see you there, Luke, Brendan, Friedrich. David's in the house. G'day, mate. How are you? Hope you had a good weekend, folks. We'll do the little intros while things are all warming up and all happening. We've got Catherine there as well. Morning, Catherine. Good to see you. If you don't already know, most of you do, though. Jason Witten's my name. Good morning. Welcome to a Wealth Coffee Chat. What's a Wealth Coffee Chat, you say? Well, we get together each day around about 10 past 8. And we have a bit of a yarn, a bit of a chat about what's going on. A few strategy ideas, a few comments on a bit of the media mayhem, inspiration, pontification, those sorts of things. Been a property investor myself well over 20 years. Coached a bunch of property investors. Thousands, matter of fact, across Australia and New Zealand. Done a few things. Helped them buy over 10,000 properties, matter of fact. Along the way, learnt one or two things. And each morning, try to share that with you guys over about a 15-minute runway. Usually it takes a bit longer. But there you go. If you knew, that's what it's all about. So good morning to you. Thanks for joining. Good to see you. And morning, Alison. Good to see you. So listen, what I was going to talk about this morning is the misunderstanding or the understanding of what a good accountant does or should do, and the pieces of the puzzle. There's 4 bits. There's 4 pieces you need to understand in this space of creating wealth when it comes to real estate. You, me, no matter who you are. Now, if you're in the world of career, PAYG, little different stories, same idea compared to business owners, a little bit more complicated. You probably have to invest a bit more as a business owner on your professionals in that space, but the concept is the same, folks. The concept is the same. What do you need? You need a good accountant, and a damn fine one at that. The challenge is, team, that getting a good accountant or understanding what they should do is probably, something you have to learn as you go along, or you get involved with what we do, mentoring and coaching, and then you learn about your accounting team. Let me put it in perspective. You guys know the drill. We've got a concept around here called the 6-star team. And with the 6-star team, as a property investor, there is at least 5 and then maybe a bunch of other providers that you need on this journey, right? On this journey, if we look at the journey of investing, and you guys have seen this many times, and if you're new, then welcome to one of our models here where we talk about the 3 stages of a property investor. The acquisition stage, this is when you need to buy all your properties. This consolidation stage, this is the stage where debt reduction can play a part, and tax efficiency. Efficiency is pretty important, and this is where all of your hard work as an investor turns into sort of cash flow and also lifestyle, right, as you go along. And over these three phases, that could be anywhere from sort of 20 to 30 years and beyond. You need different things at different times in that journey. And we talk about, the people you're going to need in that journey as an investor over that 20-30 year period, folks. Pretty important. Listen, a mentoring, coaching person, an expert in their field, property investing, let's say. This is the chosen conversation we're having this morning. The Wealth Coffee Chats is about the idea of creating wealth, long-term sustainable wealth through the investment vehicle, residential real estate. Some of you who are business owners will buy some commercial properties, but by and large, mostly we're involved in fairly straightforward, good quality, buy well, don't ever sell, good quality bits of real estate. So, but if you think about it, when we talk about the sequence of events as a property investor, first, I believe you should get some coaching and mentoring, and to be honest, some great education. Great education. You shouldn't do things that you don't understand. Now, you don't have to understand every single detail down to the last bit. That's what I call analysis paralysis. But you need to understand what's going on. You need to understand why you would be doing it and how it fits into your long-term plan. Get yourself a coach, a mentor, get some education. Number two, you need someone in the world, unless you're sitting on a pile of cash, folks, which most of us aren't, are we? It'd be good to, but, no, it wouldn't be good to. Sitting on a pile of cash is pretty useless. If money is undeployed, underutilized, then it's wasting away. It's atrophying. It's rotting away, right? You need to get your lending sorted. The third is you need to get out there and buy something. It's not the first. And this is where a lot of people, most investors get it wrong. Most investors get this totally wrong, right? They go, what do you think about this property? And they go and do this. They go, what do you think about this property? And I'm like, well, what's your strategy? What's your 20-year plan? What's your goal? Like, why would you buy it? How does it fit in? And they go, I don't know. It just looks like a good property. I heard you should buy a house. I heard you should buy a whatever. Right? Wrong. Ask about face, folks. Right? You don't talk about buying something until you've got your strategy. This needs to be first. Never, I'll buy something. And, well, if you have bought something, you've got no idea why you did it, and you don't know how it fits into your strategy. If you're sitting there and that's you, go get yourself a coach and a mentor. Find out your long-term strategy. Work out the process of diversification and the cash flow and the types of deals you need, all that sort of stuff. Ultimately, you're going to have a team, and especially if you follow our conversation around the diversification of locations and types of properties, you're going to need multiple property managers. And ultimately, folks, team, you're going to need a great accountant, okay? These can be the hero of this whole process. These people here, the tax accountant, they can make or break, very sadly, a lot of them break this process of wealth creation because they are not wealthy themselves, all right? And I'm going to talk about that in a second, okay? And then specialist providers. Who are specialist providers? People to do with, like, let's say, financial planners, super, insurance, depreciation. There's multiple things over in this specialist provider area that you may need from time to time. Excuse me. All right, how does this all fit in? Well, let's talk about accounting. All right, let's talk about not all accountants are created equal. But the challenge is we can't blame the accountants because accounting or doing taxes is quite a varied. It's a vast topic. It's a vast subject, and you and I must understand. We need to know what accountants are good for which bits. Okay, so let's talk about that this morning. This is the 4 pieces of the puzzle when it comes to accounting. Right, what is the first piece of the puzzle? Does anyone want to have a guess at what most accountants do? And you might not know the word here, but have a crack at it. Have a crack. This is not about have a crack. What do you think? What's the first piece of the puzzle? Most accountants do this, and they don't call it this, but anyway, let's understand what it means. Oh, there you go, Brendan. I love it. Brendan's on it. Yep, fine. Yeah, absolutely. If you want good accounting and understanding in the world of property, you should get one that's into property themselves. They need to invest. So let's talk about this world of, Brendan got it straight up, compliance, right? What is compliance? Does anyone know? Put it in the chat for me. What is compliance, folks? What's the things? Now, stick with me here. It might sound a bit boring, but it's important to understand. Compliance. What is it? What's the thing? And this is kind of a multiple thing, and some of this will apply to PAYG. Some of this will apply to business owners, and some of it will apply to the whole thing, right? What is compliance? Well, let's talk about compliance. In the world of business, there's more compliance than in the world of PAYG. But, BAS, GST, right? Payroll calculations, right? Super guarantees. SGT, I think it's called, super guarantee or something like that. Yep. Staying out of jail. Well, it's true. You got to stay out of trouble, Brendan. That is for sure, right? PAYG variation. If you want to do those sorts of things in the world of being a PAYG, right? That's what compliance is, and this often can happen. How often would this happen? Sort of, sometimes depending on, monthly, quarterly, even sometimes weekly or fortnightly. If you're looking at the PAYG stuff, but the world of compliance, folks, and this is where a lot of people get confused about their accountant. If their accountant is specializing in compliance, then you need to understand the idea of will they be able to do these other things, all right, in the world of whatever it might be. Right, so compliance. Now, over here, this is where you want to have a look at, let's call it tax returns. Let's call it optics. Optics, looking at the optics of how is your world going? How often do you check in? How often do you check in? Let's see if is that how you spell optics? It's a bit weird. How often do you check in on how you're going, right? With your wealth, do you check in on your cash flow? Okay. Cash flow. Do you check in on a profit and loss? Now, this applies to PAYG business owners as well. How often do you check in on your cash flow and analyze your property? Now, some of you might just do that yourself with some tools. Some of it might be complicated, so you might need your accountant to help you out. But how often do you check in on your cash flow, your P&L, and manage the tax returns and tax planning in advance, folks. Right. Number one, compliance, do the stuff that you have to do. Number two, optics, look into the future. And usually anywhere between, a month to a quarter to a year into the future, and sort things out. Is your cash flow on track? Is your profit and loss looking good? Certainly the balance sheet stuff as a business owner, get ready for your tax returns. Make sure you do some tax planning in advance, not in the past, but in advance. What can you do? All right. Now, the challenge is, you'd think, oh, well, can't they do compliance and optics at the same time? Often they don't. Often there's not the same skill set, ladies and gents, all right? So you've got to keep an eye on that, okay, as we go. Now, this one down here, which is pretty important for a lot of us, asset protection. Asset protection. And what does that mean? Well, it means, how do we own our things? Structuring, right? I had this one the other day. I chatted with a business owner the other day, and they had a very complicated business setup, and they had quite a lot of risks in what they did. And they had one company with one shareholder, one director. They'd made a lot of profit, and the only way they could get that profit out of the company was with one shareholder. No trusts, companies, bucket companies, like it was a disaster, right? But what happened is they had an accountant doing compliance work, and the optics weren't into the future, but the optics were looking backwards, which is really optics that look backwards is not optics. It's still compliance, right? So that's where you need to understand. Asset protection, structures, the flow of profits, right? Profits and ownership, control, risk. When was the last time you sat down with your accountant and talked about these things? How am I protected or not protected asset-wise? How does my profits flow? How do I own things and control things but minimize my risk? When do you have those conversations? And those conversations should be often, right? They should be at least 2 to 3 times a year, if not more often, okay? So we've got asset protection. And the last one, wealth creation. All right, because they're not all the same, team. They're not all the same conversations. They're not all the same behaviors. How do you manage the growth of your wealth into the future? How do you pass on wealth, maybe through to family members? How do you get access to that stuff? Let's say if you're a business owner, how do you sell a business and structure it properly for the future? You sell your business. How do you get a commercial property in your portfolio and understand what that looks like? All sorts of stuff, right? It's important. Now, this is up to us as investors to really get our head around, right? Don't be expecting a compliance accountant that's all they do. They work on compliance, right? To often, compliance and optics, depending on which way they look, they could do a pretty good job of both of those if you really make sure you get the right one. Often, unfortunately, folks, these accountants or accounting businesses are structured for compliance and optics, but they're not structured for, or they don't necessarily have the right people in their businesses for wealth creation and asset protection. And, sometimes you might need some other advisors on your board when it comes to these two, okay? And often the ones that are advising on asset protection and wealth creation are terrible at doing the compliance and the optics, right? So understand that not all accountants are created equal. There are 4 things that they could or should be doing, and you need to talk to your accountant about all 4 of them, okay, as you go along. Compliance, optics, looking into the future, your asset protection, and your wealth creation. And, unfortunately, they're not all able to do all of them at the same time. So thought I'd talk about that today. It's such a deeper, there's so much more to this topic when it comes to our world of investing, certainly with an accountant. But if you look at the journey over here, when it comes to this 20 years, you need your accountant to be able to see into the future with you, and how you need to do things at the start. Often, let's say with PAYG, you need the depreciation and you need the negative gearing at the start so you can improve your cash flow, right? Cash flow. But what happens at the end, team? What happens at the end? Well, so this might be negative or neutral down here, neutral down at the beginning. At the end, we're in our lifestyle phase, this is massively positive cash flow. And so now, you go, oh, well, I'm paying all this, I'm earning all this money in my name. How do I now minimize that cash flow, those tax deductions, so I don't have to pay so much in tax, right? But the structure at the beginning is not the structure at the end. So what do you do? And those are the questions you've got to ask and talk to your accountant about. How do we set ourselves up for the most efficient ownership, the most efficient tax deductions, the most efficient process over a 20 or 30-year period? And I can tell you this, there is not one perfect thing. There's not one perfect structure. There's not one perfect way to do it. Anyone tells you that, they're full of shit, because unfortunately, what you might need at the start is counter to what you would need at the end. The magic, folks, is being able to navigate that smartly. It's not impossible to. It's actually completely 100% doable if you've got a good team that goes with you over that distance, that journey as an investor. Anyway, there you go. Accountants, you need a great one. If you don't have a good one, why not? If you want a good one, let me know. I can connect you with the ones that we use. They're very good at what they do. But you got to find one that suits you, like works with you, gets you, all right, as we go along. Anyway, there you go, folks. Wealth Coffee Chat done and dusted. 15 minutes. No, it took longer. Always takes a bit longer. Anyway, there you go. Done and dusted this morning. Thanks for joining me, team. Good to see you. Join me tomorrow for another one. If you're up for it, let me know. But that's it. Monday, the 31st. What do we got? Maybe tomorrow. Tomorrow, the RBA says yay or nay. We shall see. Interesting times, as always, folks. All right, that's it. Wealth Coffee Chat done and dusted. You guys take care. See you tomorrow. Bye for now.